Hi there, it's Bill with Smart Trades. It's Friday the 26th of February around 10:45 a.m. Pacific time, and wanted to take a quick look at the S&P as well as Google, Apple, and crude oil, gold, and the dollar. Anyway, quickly looking at the S&P, the best count that comes to mind when I look at this chart, just taking a fresh look at it, is that the decline off the highs from last month is a corrective ABC. Um, certainly there's another count, which I'll get to in a minute, but just sometimes the your first look is the clearest look, and when you look at that decline, it looks more like an ABC than anything else. And off of the low from earlier this month, you can count 1, 2, 3, 4, and one more new high is going to give us 5 up off that low. Um, and again, there is a different interpretation that is more bearish, but certainly you have to respect the possibility that this is what it looks like: a ABC correction, an ABC correction with a impulse off of that. If that's the case, we should see a rally to the 1120, 1130 area, and then a decline that holds above the February lows, and perhaps coming back to the 1060, 1080 area, and then off to a third wave to the upside. Um, the real tail will be in the next decline, but let's take a quick look at the alternate count before we get to that. And that would be that this decline, the first portion of the decline is 1, and then we have an irregular correction, A, B down, and then again our 5 waves up, which could be counted as C. The likely target, if that's the case, is the lower end of that range I mentioned, towards 1120 or so, which is 62% of the first portion of the leg down, or wave 1. In addition to that, that would give the impulse up, or the C wave up, a nice structure with approximate equality between wave 1 up and 5 up. At any rate, again, the real tail is going to be how it declines, if indeed it declines, off of that next rally. And so let's watch that carefully and see how that structure is. If this is a top, the decline should be pretty sharp and immediate. If it's a corrective decline and we're going to see new highs, the decline is going to be more choppy and less impulsive to the downside. And obviously, it needs to hold above that low down towards 1040. Here's the hourly, and again, you can see the breakdown here of the rally off of the low. It's looks impulsive. You got a clear ABC off of the high a couple days ago, and that counts in my book as ABC as wave 4. And again, here's the channel, and the upper end of that channel comes in towards 1129, 1130. So that's where I would also look for a potential peak, as well as the 1120 area. Here's a breakdown on an even smaller scale. This is the S&P cash, and here's the internals of the rally off of the low yesterday, and you can see clearly an impulse wave up. The one fly in the ointment is that the breadth and the volume are not spectacular, but nonetheless, the form is pretty good. That's a nice looking impulse wave to the upside, and the implication is that we're going to have a corrective decline in another rally, and again 1120, 1130 or so would be the target. And trying to integrate the longer term picture here with the S&P as well. Sorry, the scaling is cut off a bit, but the bottom line is, if we do make a new high above the 1150 area basis the cash, that's going to give us 5 up off of the March 09 lows. The implications to that are that we're not going to crash, that we'll see a fairly considerable corrective decline, but that should hold above the March lows, perhaps the 800 to 1000 area, but we're getting a little ahead of ourselves here. Let's see first if we make that new high, and then see how the decline unfolds, if indeed it does. But the target, if this is indeed a fifth wave that's starting to develop here, is up towards the 1220, 1230 area, basis the S&P cash. And here's the monthly chart. This gives us the overview of the long-term count, which also can be counted off of the 2000 highs as an ABC decline that completed on the March lows. A down into the 2001-2002 bear, a B wave high, and then you can clearly see a potential 5-wave structure, which could be the end of C. I haven't thought that that was the case. This rally looks so corrective. Nonetheless, there it is. It's certainly a possible count, and one that we need to pay attention to, particularly if we carve out that 5th wave up. Here's a quick look at Google. Google's important here because it's been one of the drivers on the way up in the NASDAQ, and you do have a clear 5 waves down, which indicates that lower prices are coming. That said, a correction of this decline could take us back to 580, 590, and that rally could coincide with the S&P rally up above 1200. So we'll watch that unfold. You want to see a corrective termination in that 580, 590 area to confirm that indeed Google has topped. But sure looks like 5 waves down to me. It's a pretty clear chart. And here's Apple. Apple a lot less clear. You can count this decline as a 1-2-1-2 or as an ABC decline, and the rally also is tough to call here. That said, there should be a lot of resistance around the 208 level. If it goes through 208, there's a good chance it's going to make new highs, and we'd reevaluate Apple. But for now, watch 208. Dollar index, also consistent with the possibility that we've got a ABC decline in the stock market, in that the dollar has carved out a potential ABC rally up. As long as it doesn't, just accelerate through about 82 or so, I would at least look at the possibility that this entire rally off the December low in the dollar is an ABC rally, and A equals C around 81.20. Gold, also consistent with this idea. The best count of this decline, obviously A, B, C. That's a corrective pattern as long as we take out the B wave high. So let's watch it, but it looks like new highs are probable in gold. And finally, here's crude oil. That chart is pretty much uncountable, aside from the fact that it appears to be a wedge. I would look for it to rally towards the top of the wedge one more time, and then perhaps a decline. But that's also basically consistent with the pattern that we're looking at in the S&P and in gold and so on and so forth. So anyway, that's it for now. Have a great weekend, and thanks for watching. Bye-bye.